what's the state of the cloud? There are all kinds of questions given the behavior of tech stocks versus the 10-year. It's up, it's down. What's your view?
The state of the cloud broadly is record hot right now. We basically saw 2 years of innovation pulled forward into 2 months, as Satya Nadella famously said last year, and that trend continues. The business fundamentals are exceptional. You're seeing beat and raise quarters and hyper growth. On balance, the average tech company is growing over 40% right now, and yet multiples are volatile because of interest rates. We saw the last couple of weeks things bouncing around. It's not a business fundamentals question at all. It's absolutely a response to the question of rising interest rates and the impact on long-term cost of capital and therefore overall valuations.
But I'm seeing big differences between some companies like, say, Snowflake, MongoDB. I'll think of some in your wheelhouse. Shopify. The growth rates that certain types of companies are seeing that have a kind of read on the cloud. Who do we just have? Qualtrics versus some others who have talked cloud and have tried to kind of assemble their numbers to show a big cloud business that aren't showing that same type of momentum. Has the difference between those two types of companies opened up even more during this period?
Well, you're seeing a lot of cloud washing, particularly out of legacy vendors where they're trying to look and feel cloud-like, including Oracle and many others. But the fundamentals in the industry are absolutely at record highs. Snowflake was not only the largest cloud IPO of last year and in history, but also the largest software IPO in history. And we're likely set up to see that even surpassed this year with a cloud IPO that comes over the top. Hopefully, Stripe will finally tap the public markets later this year after their almost $100 billion private market valuation that you raised. You could put Databricks, Rubrik, you could put HashiCorp, a number of these companies absolutely in that bucket as well that are chasing those lofty decacorn-like valuations. And so we absolutely see the fundamentals in the cloud industry remaining strong. Of course, collaboration stocks have had a particular good run when you look at the tailwinds from shelter in place, but it's actually a trend that we're seeing pretty broadly across the 61 public pure play cloud companies holistically in the index today.
So, Byron, you say that the business fundamentals haven't changed, but rising bond yields are sort of throwing a bit of cold water on valuation. So where do you go from here? Do they keep going up? How do you value these companies if interest rates continue to go higher?
So the most important thing is that we're seeing the continued overperformance of the businesses. And so from a fundamental standpoint, we think that will continue certainly through this year and likely over the next couple. Really, it is an interest rate question as you think of cost of capital inputs into these models. We expect a little more volatility as a result. If you get these rates to hold through the balance of the year and beyond, I think we could have an absolute record year in the industry. These 20x revenue multiples could absolutely hold. And it's likely that over time, as interest rates walk back up, those will pull back a little bit, maybe into the mid-teens. But as the businesses continue to grow, it's likely that the valuations will outperform and that you'll see a steady uptick even under a multiple compression environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.